Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to be going over a price prediction for AMC stock this week. Now, we're going to run through the data. We're going to look at the option chain. We're going to talk about the big data coming out this week to kind of formulate an opinion on what we think might happen for AMC stock in the upcoming week. I think that's very important. I think you guys will get a lot out of this video. If you do, hit that thumbs up, like the video, as well as subscribe to the channel. So let's just go ahead and jump straight into it. I think the most important thing that you're going to get out of this video, that you need to know from this video, is there's three things we really need clarity on, that we've started to get some clarity on. Three things that are important to stocks right now. This includes AMC. This includes any other stock that you could list or you own. Three things: the economy, inflation, and the Fed. The three things that matter always when you're an investor. Right now, we know the economy is doing okay. The economy is doing well. It does not look like we're heading into a broad recession. So, boom, just two things left. Inflation. We're going to get that data coming out Tuesday. Inflation has been falling. That's been great news. Does inflation continue to fall? Well, right now, it looks like we're kind of expecting inflation will go a little bit higher. We looked at these numbers in the last video, but basically your month-over-month inflation on your core is expected at 0.3%. Last month was 0.2%. Year-over-year core is expected at 4%. That would be the same as last month. So on your core, you're expecting a nice jump to month-over-month core inflation. Year-over-year expected to stay the same. Now, month-over-month headline is expected at 0.1%. Last month was 0%. Year-over-year inflation expected at 3.1%. Last month, you were at 3.2%. So as far as the inflation outlook, you're actually expecting a little bit worse of an inflation report this Tuesday compared to last month. That would not be great. That's not what you want to see, okay? But I think you probably come in at roughly the same numbers as last month, around 0.2% for month-over-month headline. That would be seen as good news. Inflation month-over-month for your headline, I don't think it matters if you're at 0% or 0.1%. I don't think that moves stocks at all. Now, I do think your year-over-year core might come in at 3.9 or 3.8, and I think your year-over-year headline could come in around 2.9 or 2.8% as well. That could be good news. But really, the gist of this, you don't want to see inflation rising again. If it's the same as last month, that's fine. So my expectations are, as I just said, you're probably going to be in that Goldilocks kind of outlook. Maybe inflation is not continuing to plummet for another month on your core, but it probably didn't get that much worse from last month. Okay, so I'm expecting you're really not seeing a rampant uptick in inflation right now. So your two things, inflation and the Fed. Well, inflation shouldn't be a big negative bearish catalyst this week. Now, inflation is on Tuesday. The next day later, you're going to get PPI month over month as well. That's not going to be important. It's not going to move anything. You're going to get the Fed. Now, this Fed meeting, you're going to get the summary of economic projections. So the last summary of economic projections that we got was in September. Now, this is basically where all the Fed members, voters, non-voters, they basically are estimating what they think the federal funds rate will be over the next 3 years, what inflation will be, what economic growth will be, right, via GDP. In September, well, I should say in June, the last time before September, we had a summary of economic projections. The Fed expected your federal funds rate to be 4.6% by the end of 2024. And then came September. And then the Fed expected 5.1% for your federal funds rate by the end of 2024. Here's the problem, or what could be really good for AMC. The markets right now are pricing in a Fed funds rate at about 4% to 4.25% by the end of 2024. That is way lower. That is 1% lower than where the Fed estimated Fed funds rate will be just back in September, on September 20th of 2023. So if we see the Fed keeping their estimates roughly the same, which says expect 1 to 2 rate cuts in 2024, that's a problem. Well, technically only 1 rate cut. If the Fed funds rate is projected at 5.1%, we're in between 4.25 and 5.5%. Technically, you'd only be pricing in 1 rate cut for 2024, as per the Fed. That could be a problem, because some of this rally so far has been due to the economy holding up, due to inflation falling, but also the market's expecting 5 rate cuts for 2024. If the Fed pushes back on that via the summary of economic projections, that could be bad news. But there's also another factor to consider: the GDP estimates. So in June, the Fed had projected 1.1% GDP for 2024. In September, they project 1.5% for GDP. Last summary of economic projections in September. If the Fed funds rate, let's say the Fed comes in line with markets and they say 4% by the end of 2024. But let's say their GDP estimates come down to 0.3%. Then the Fed is basically saying we could go into a recession next year. That may not be good news as well. What you want to see is maybe the Fed keep their 1.5% GDP target. My opinion, they might drop that to 1.3% or 1.2%. But tell us Fed funds rates are probably going to be around 4%. That would mean the Fed is basically saying we're expecting a soft landing for 2024. No recession. That would be great news. It's hard to say when it comes down to the Fed, but that's roughly what I'm expecting. Maybe 1.2, 1.3% GDP, maybe 4 to 4.5% Fed funds rate target for 2024. That would likely be good news. That would be the Fed confirming what the markets are currently pricing in. That would be great news. So basically this week is going to be confirmation or rejection. And the markets, well, they're not going to like rejection. Not going to like that at all. Now let's give you guys a run through of the Ortex data, go over all the data with AMC here briefly, and then we will go actually get into the charts and where I think AMC stock can go from here. So you do have a short interest percentage of free float at 10.04%, $135.36 million worth of short positions. Days to cover 0.91. Let's see. 19.85 million shares that are currently sold short. Shares out on loan 11.37 million. Cost to borrow 1.13%, 26.33% utilization, and 53.4 out of 100 for your short score. So definitely not the most attractive numbers here, but I don't think any of us actually think these numbers are accurate, but I still like to say them here in this video, in these videos, so you guys can kind of at least know what the real fake numbers are in AMC. I think they're fake. You might think they're real. If you think they're real, well, the odds of a squeeze, very, very low. But I think the short interest could be hundreds of percents. Now, for this upcoming week, keep in mind, the data does not refresh after Friday's close. So once we get to Monday's open, which will be tomorrow morning, we will get new updates for the Stonko Tracker data. But as an aggregate, you do have about 3,600 calls that are currently in the money for this Friday, 161,000 calls out the money, 24,000 puts in the money, and 74,000 puts that are out of the money. So there is a potential here for some form of gamma squeeze. If we actually take a look at the options chain for AMC stock as of right now. Let's go ahead and look at this. You do have at the $7 call about 8,500 calls that are currently held in open interest, 11,500 calls held in open interest at the $7.50 call, about 15,000 for open interest at the $8 call, about 9,000 for open interest at the $8.50, and 9,300 for open interest at the $9 call. At the $9.50 call, you do have about 1,000 for open interest and 13,000 for open interest at the $10 call. So you do have a lot of open interest that is just outside of the money. That could be maybe fuel for a gamma squeeze. I think these numbers are going to refresh and we might see some of these strikes become a little bit larger. So definitely something to be watching for in this week ahead once we start the trading week. But I think it really comes down to the Fed, to be honest with you guys. I see a very low chance of inflation coming in hotter than expectations. Very low chance of that. If anything, it's probably going to come in lower than expectations. I see a reasonable potential outcome that the Fed just really stays by the same thing they've been saying. 1, maybe 2 rate cuts in 2024. That would probably not be seen as good news for our markets. So there's always going to be 2 possible outcomes to any week, whether it's a good week or a bad week. Now, here in these videos, I like to try to give a prediction on what I expect from AMC. Now, I think if we do have a bad week, AMC stock could fall quite a bit. If we have a bad week and things just go all bad, the Fed just really rejects the 5 rate cuts the markets are pricing in, AMC stock could fall probably 20%, down to 5.51%. Some of this rebound, some of this slight rally that we have seen, like 40-cent rally from the low at $6.52 to where we are at $6.93, has been due to the 5 rate cuts that are priced into our markets. If that starts to get unpriced to our markets, what are we left with? We're left with a stock that keeps getting diluted, that estimates are falling for next year's box office. There's not a whole lot to grasp onto. Now, if the Fed confirms this rally or the rate cuts, the 5 rate cuts markets are currently expecting, well, that is going to likely open the floodgates for hedge funds, institutions to start buying small caps. A lot of uncertainty will be taken off the table if the Fed is truly in alignment with the markets. Because it's one thing for the markets to price in, to go from pricing in 2 rate cuts to pricing in 5 rate cuts, that's one thing. But if the Fed goes from pricing in 1 or 2 rate cuts to saying they're expecting to cut rates 5 times, totally different story. That is way different, not even in the same ballpark, right, of significance. Obviously, the Fed confirming it would be way more significant than what the markets are currently pricing in. So you have seen some amount of capital heading into small and mid-cap stocks based on the Fed's or based on the market's expectations of rates. But if the Fed confirms it, you could see billions and billions and billions of dollars head into small and mid-cap stocks, because that's where you would want to be if rates do really come down five times in 2024, maybe more than that. So on a downside move, about 20% lower would make sense to me. If we get the best possible outcome here, if we do get a Fed that is basically in line with what the markets are pricing in, you could easily see a 30+% rally in AMC stock this week. You could see AMC break above $9 per share. Now, the important level is going to be $8.58 per share. That is your 50-day moving average. If AMC gets above there, then you could probably run into the 10s, because normally if you get above that, probably expect an even larger rally. So if we can get above that 50-day moving average, we could go really parabolic. I think it's really hard to say. I think it's a toss-up here. My gut wants to lean towards the Fed is in line with the markets, but a part of me says the Fed might not be. Tough call. It's a really, really tough call for this week, but I am expecting a big move. I think there's probably a slightly higher chance that the Fed is bullish this week, that they do confirm, 5 rate cuts that the markets are pricing in is probably correct. But I would say it's like 60-40, probably a 60% chance we get a dovish Fed on Wednesday that is in line with the markets. Maybe a 40% chance that the Fed is not in alignment with the markets. The Fed is not expecting to cut rates 5 times. Tough call. Let me know what you guys think down below in the comments section. But clearly, if that is the case, if Wednesday is positive, Thursday and Friday could be pretty euphoric for the markets, could bring in a lot of money into small and mid-cap stocks. That just by default, people buying IWM will send money into AMC, right? There's 1,950 stocks in the Russell 2000, including AMC. So, I mean, if $2,000 go into IWM, just doing stupid math here, well, couple dollars, maybe $5 or $10 or something along those lines would go into AMC. Maybe more than that, maybe like $25. You get the idea, right? Some money will go into AMC stock. So just that alone could be big for AMC. Let me know what you guys think about this down below in the comment section. In the meantime, hit that like button and subscribe to the channel if you guys made it to the end of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.